You know, in an industry dominated by absolute giants, one company has managed to build the second most launched rocket in American history. But here's the crazy part. That's not even the most interesting thing about them. Today, we are doing a deep dive into Rocket Lab. Look, that's not just us saying it. That's a direct quote from a recent equity research report, and it perfectly captures what's happening here. Rocket Lab has gone from this small niche player to a truly formidable company that the big guys absolutely have to take seriously. And that's the real question, isn't it? I mean, the company is burning through cash and staring down some massive technical challenges. So is all that potential growth actually worth the incredible risk? We've dug through the numbers, the reports, and the strategy to find out. All right, so here's our game plan. First, we're going to unpack Rocket Lab's unique spot in the market. Then we'll dive into how they actually make money and what could go wrong. After a quick financial health check and a look at the valuation, we'll give you our final verdict. So let's kick things off. Section 1, the challenger to the monopoly. How on earth did Rocket Lab manage to carve out a space for itself? Well, their strategy was just brilliant. See, they didn't try to take on SpaceX head-to-head. Instead, they started by completely dominating a niche, the small satellite launch market. With their Electron rocket, they've grabbed about half of that entire sector. But here's the really smart move. They're not just a space taxi anymore. They build everything themselves, in-house, and they're turning into a one-stop shop for companies that want to get to space. Okay, so that's their position. Let's move on to Section 2 and get into the nitty-gritty of how this translates into a business model, and of course, the risks that come along with it. Now this might actually surprise you. When you hear Rocket Lab, you obviously think rockets. But take a look at these numbers. A whopping 74% of their revenue doesn't come from launches at all. It comes from their space systems division. We're talking about the guts of a satellite, the hardware, the software, the star trackers, the stuff that actually makes the mission possible. Understanding this diversification is absolutely key to understanding the company. So this really breaks it down into the three pillars of the company. You've got space systems, that's the cash cow right now. You've got launch services with a reliable Electron rocket, that's the foundation. But the entire investment case, the thing that could change everything, is the future, the much bigger, reusable Neutron rocket. Its success isn't just a bonus, it's everything. And speaking of Neutron, this brings us to the biggest red flag out there. The rocket's first flight just got pushed back to 2026. In the space business, delays are a massive deal. They burn cash, they spook investors, and they put a ton of pressure on the whole operation. And that delay really highlights the two biggest risks. The first is internal. Can they actually pull this off? A major failure or more delays with Neutron could sink the whole growth story. The second risk is totally out of their control, the reliance on government contracts. We just saw NASA cancel its multi-billion-dollar Mars program. That's a brutal reminder that government budgets can change in a heartbeat and contracts can just vanish. Okay, so that's the business and its risks. Now it's time for a financial health check. We're going to cut through all the jargon and just focus on the four numbers that really matter here. First up is revenue growth. The easiest way to think about this is like the company's speedometer. It just tells you how fast sales are expanding. And let me tell you, Rocket Lab has its foot slammed on the gas. A 48% jump in revenue year over year, that is explosive. It shows that despite all the risks, demand for what they're selling is incredibly strong. Next is gross margin. This is all about pricing power. After you actually build the product, how much profit is left over? And this is a fantastic sign. Their margin leaped from 26% to 37% in just 1 year. That tells you they're getting much more efficient, and every dollar of sales is becoming more profitable. This is exactly the trend you want to see. Our third metric, the debt-to-equity ratio. Basically, this is a risk check. Is the company funding all this growth with its own money, or is it taking on a ton of debt? At about 40%, their debt level is pretty moderate. I mean, they're not debt-free, but they aren't dangerously over-leveraged either. This gives them some breathing room as they spend all that money developing Neutron. And finally, the last one, and it might be the most important number of all for a company like this, free cash flow. Forget accounting profits. This is the actual hard cash the business has left over. It's the oxygen a company needs to survive. And here's the catch. Rocket Lab is burning through that oxygen. A lot of it. They are not cash flow positive. But this is a choice. It's a deliberate, massive bet. They're pouring every single dollar they can into developing Neutron because they believe it's the key that will unlock a much larger, way more profitable market. So with that whole financial picture laid out, it's time to weigh the two sides of the coin.
the bull versus the bear case for Rocket Lab. The argument is really well defined, isn't it? The bulls are going to point to that explosive growth, a massive backlog of over $1.1 billion, and of course, the game-changing potential of Neutron. The bears, on the other hand, will point right back at the fact that they're unprofitable, burning cash, facing huge risks with Neutron, and, oh yeah, competing in the shadow of SpaceX.
So what does Wall Street think? Well, with the stock trading around $76, you can see there's a lot of optimism. Morgan Stanley has a target of 105, and Bank of America is even higher at 120. The consensus is clear. If Rocket Lab can execute, analysts see significant upside from here. So after weighing all the evidence, it is time for the final verdict.
Our recommendation is a buy, but, and I can't stress this enough, this is for long-term investors who have a high tolerance for risk. This is not a get-rich-quick stock. It is a high-risk, high-reward bet on the future of the entire space economy. We are establishing a 12-month price target of $105 per share. We believe this reflects the company's strong execution so far and the market's growing confidence that they will eventually succeed with the Neutron program.
So look, let's boil it all down to one thing. The strongest reason to buy is that this company has already successfully transformed itself, and Neutron unlocks a path to massive profitability. But the single biggest risk is that Neutron fails. If Neutron is a bust, this entire investment case is in serious trouble. It's really that simple. Now, if that level of risk just isn't for you, there are more defensive ways to invest in this sector. You could look at the established giants like Boeing and Lockheed Martin. They offer profitability and consistent dividends, but they come with a much lower growth profile. It really comes down to a choice. Do you want the high-growth disruptor or the steady, established incumbent? Rocket Lab's potential is huge, but so are the risks. It's a story we're going to be following very closely. Now, I want to hear from you. What company should we put under the microscope next? Let me know in the comments.